All right, so let's dive into something pretty wild.
Okay.
Warren Buffett's Berkshire Hathaway just dropped a record-breaking $26.8 billion in taxes for 2024 alone.
For 2024 alone.
Yeah, crazy, right?
Yeah,
That's more than some countries make in a whole year.
That's more than the GDP of some countries.
Exactly, and get this. It brings their lifetime tax payments to over $101 billion.
It's fascinating to see how Berkshire Hathaway went from paying zero taxes in 1965 to becoming the biggest corporate taxpayer in U.S. history.
Exactly. So you've got some fascinating research from a recent podcast that unpacks Buffett's latest annual letter and some of his investment strategies.
Yeah.
And I know you're all about getting to the heart of complex financial topics quickly. So what can we learn from how this financial empire was built?
Well, it starts with understanding Buffett's long-term vision and the sheer power of compound growth.
Okay.
Instead of issuing dividends to shareholders, he consistently reinvests those profits back into the company.
Yeah.
It's like a snowball rolling downhill, getting bigger and bigger over time.
So playing the long game is key.
Absolutely. And it's a stark contrast to the short-term thinking we often see in the market today.
Yeah, for sure.
Even Charlie Munger, Buffett's longtime partner, was initially skeptical
Oh, really?
about investing in the textile company that would eventually become Berkshire Hathaway.
Interesting.
They saw the potential for growth and stuck with it.
Okay, so they build this financial empire, but how are they generating the kind of cash flow needed to cover these massive tax bills?
This is where the idea of forever stocks comes into play.
Okay.
Buffett focuses on owning iconic cash-generating brands. Companies like Apple, Coca-Cola, and American Express
Makes sense.
that have products and services people use every single day.
I see where he's going with that.
Yeah.
Those are some strong brands. But how does that actually translate into huge profits?
Buffett zeroes in on companies with what's called high returns on tangible equity.
Okay.
Think of it this way.
Yeah.
A company like Coca-Cola doesn't need to constantly invest in heavy machinery or new factories.
True.
Their brand recognition and secret formula are their most valuable assets.
Right.
This allows them to maintain incredibly high profit margins.
So it's about finding the companies that are so efficient and dominant in their market.
Right.
It's almost like they're printing money.
Exactly.
But how do you even find companies like that?
It's not easy,
Yeah, I can imagine.
but that's what makes Buffett so successful.
Okay.
He looks for businesses that have a strong competitive advantage, often operating almost like monopolies in their respective industries.
So monopolies are good in this case.
Well, it's more about having a dominant market share.
Okay, that makes more sense.
Think about the scale of some of these holdings.
Yeah.
Berkshire's Apple stake alone is worth $245 billion,
Wow.
and they own a staggering 400 million shares of Coca-Cola.
Okay, that's a lot of Coke.
It is.
It seems like he's found a way to really make this long-term strategy work.
He really has.
So if you're someone looking for investment strategies that stand the test of time, Buffett's approach is pretty compelling.
I think so too.
But there's another layer to this that I find really intriguing.
Okay.
He's known to be both a critic and a champion of capitalism, which seems a bit paradoxical.
Yeah, that's one of the most interesting things about Buffett. He's not afraid to acknowledge the flaws of capitalism.
So what are some of the things he criticizes about the system?
He's very vocal about the issues of inequality, corporate greed, and people taking advantage of others. But here's the catch.
Okay.
He also strongly believes that despite its imperfections, capitalism is still the best system we've got.
Huh. Interesting.
He often highlights how America's culture of saving and investing has been a major driving force behind its economic success,
Okay.
transforming a nation of just 4 million colonists into a global superpower.
So he's calling out the issues, but also recognizing the strength. That's a pretty nuanced perspective.
Exactly. He's not advocating for scrapping the system entirely.
Right.
He's calling for a more responsible and ethical approach to capitalism.
And I remember reading that he also had some strong words for the government about protecting the dollar.
That's right. He sees inflation as a major threat to savers and long-term investments.
Okay.
He's urging policymakers to protect the stability of the dollar, which makes sense considering Berkshire's empire relies on a strong currency
Yeah.
to keep compounding those returns.
It's like he's saying, hey, let's fix the issues, not abandon ship.
Right.
Okay, so we've got the long-term strategy, the forever stock concept, and this balanced view of capitalism. But here's something else I'm curious about.
Okay.
Berkshire Hathaway is currently sitting on a massive pile of cash, $334 billion to be exact. What's he planning to do with all that?
That's the $334 billion question on everyone's mind. It's a huge amount of money, even for Buffett.
It is. What's the strategy there?
Well, he's been very open about his approach to crisis investing. Essentially, he's waiting for a market downturn or a major correction to deploy that capital.
So he's playing the waiting game. But that must be tough with so many people expecting him to make a move. What does that say about his outlook on the economy?
That's a great point. His willingness to hold on to that much cash suggests he's exercising a degree of caution. He sees potential trouble on the horizon and wants to be prepared to capitalize on opportunities when they arise.
Yeah.
Remember during the 2008 financial crisis?
Oh, yeah.
He made some very strategic investments.
Right.
That paid off handsomely.
That makes sense. He's not just sitting on a pile of money. He's waiting for the right moment to make a strategic play.
Exactly.
That's a pretty powerful lesson in patience and discipline.
It is.
But for the average investor, someone who doesn't have billions stashed away, what can we learn from Buffett's approach?
There's some key takeaways here that apply to all investors.
Okay.
First, the power of compound growth can't be overstated. Even small, consistent investments over time can generate significant returns.
So it's about steadily building wealth, not necessarily chasing those overnight wins.
Exactly. It's a marathon, not a sprint.
Love it.
Another important lesson is to invest in quality.
Okay.
Think about the companies Buffett favors. These are brands that have been around for decades, weathered the economic storms, and emerged stronger.
So it's about finding companies that can stand the test of time. Are there any specific traits we should be looking for?
Look for strong brands, businesses that offer products or services with consistent demand, and companies that have some pricing power,
Okay.
meaning they can increase prices without losing customers.
Right.
These are all indicators of a resilient and profitable business.
Okay, so we've got compound growth quality businesses. Anything else we can glean from the Oracle of Omaha?
Think back to Buffett's balanced perspective on capitalism.
Right.
He recognizes the system's flaws while also appreciating its potential for good.
Yeah.
As investors, we need to be aware of the risks and the ethical implications of where we put our money.
He's not promoting blind faith in the market. He's advocating for a more informed and critical approach to investing.
Absolutely. It's about understanding the system's strengths and weaknesses, engaging with it responsibly, and aligning your investments with your values and long-term goals.
It sounds like patience is a critical factor in all of this, especially in today's volatile market.
Without a doubt, Buffett's success didn't happen overnight. It took decades of careful planning, disciplined investing, and a willingness to wait for the right opportunities.
It's a reminder that investing is a journey, not a destination. To stay informed, be patient, and make strategic decisions
Right.
that align with your overall financial goals.
Exactly. It's about building a solid foundation for long-term financial success.
So we've covered a lot of ground here. We've explored the power of long-term thinking, the importance of investing in quality businesses, and the need for a balanced perspective on capitalism. And we've seen how patience and strategic timing can be incredibly valuable tools. But there's one final thought-provoking question I want to leave everyone with. Imagine you're Warren Buffett, you're sitting on that enormous $334 billion cash reserve with all his insights about the market and concerns about the economy. What would you do with it?
It's a great question to consider. What would you do with that kind of financial power? Would you be tempted to go on a shopping spree, snapping up companies that appear undervalued? Or would you double down on the existing holdings, further cementing your position in those iconic brands we talked about?
There are so many possibilities, it's almost overwhelming to think about.
There's another option too. Would you hold tight, waiting for an even bigger opportunity to emerge? Perhaps a significant market correction that creates those once-in-a-generation buying opportunities.
It really makes you think strategically. It's not just about what to buy, but also when to make your move.
Exactly. That's a crucial part of Buffett's philosophy. Investing isn't just about selecting the right stocks.
Right.
It's about understanding the broader economic landscape, anticipating potential shifts in the market, and having the patience and discipline to wait for the right moment to act.
It's like a high-stakes game of chess.
Yeah,
Every move you make has consequences, and you need to think several steps ahead.
that's a great analogy. And that's what makes investing so intellectually stimulating. It's a constant learning process, a dynamic interplay of analysis strategy, and it's even a bit of intuition.
So for our listeners out there, whether you're seasoned investors or just starting your journey, Remember this, take the time to learn from the masters like Warren Buffett, study their strategies, understand their philosophies, and see how you can apply those principles to your own investment decisions.
And don't be afraid to think big. Put yourself in those high-stakes scenarios. It's a fantastic way to sharpen your financial skills and develop a deeper understanding of how the market works.
This deep dive has been packed with insights and thought-provoking questions. I hope it's given everyone a new perspective on investing and maybe even sparked some ideas for your own financial journeys. Remember, keep exploring, keep learning, and keep challenging yourself to think critically about the world of finance. Until next time.